Hey everyone, and welcome. If you're gearing up for your exams, you know how critical RBI circulars are. Well, today we're diving into a really big one, the new Master Directions on Digital Payment Authentication. We're going to break down exactly what you need to know to absolutely nail this topic.
So here's how we're going to tackle this. We'll start with the new rules themselves, then we'll get into the key terms you have to know. After that, we'll unpack the core principles, look at who's responsible for what, check out the exemptions, and then we'll wrap it all up with a quick-fire Q&A to make sure all these facts are locked in. Let's jump right in.
All right, so first things first, why is this even happening? Well, for years, the SMS OTP has been the undisputed king of digital payments in India. It's done a decent job, right? But technology has moved on, like way on. So what the RBI is doing here is future-proofing our security framework, making it not just stronger, but a whole lot smarter.
Now you know how it is with these exams. Getting the official language right is half the battle. This RBI document is packed with important terms, but let's start with the one that is the absolute foundation for everything else.
You're going to see this phrase everywhere, factor of authentication. It's the cornerstone of this whole directive, and trust me, it's prime material for an exam question. So let's be crystal clear on what it means.
In simple terms, it's just a way you prove that you are who you say you are. Think about it. It could be your password, maybe a special token, or even something unique to you, like your fingerprint. It's the proof you offer before a transaction can happen.
And this is super important. The RBI basically sorts all these proofs into just three neat categories. You got to remember these. First, there's something you know. That's your password or your PIN. Second, something you have, like your physical debit card or a security token. And third, something you are, which is biometrics, like your fingerprint or face scan. Know, have, and are. That's the whole game.
And hey, to make this super easy to remember during the exam, here's a great little mnemonic for you. Just think KHA. K for what you know, H for what you have, and A for what you are. KHA. Simple, right? It's a fantastic way to recall these three distinct categories under pressure. Okay, now that we've got the lingo down, let's get into the real logic behind this. The entire new framework from the RBI is built on three core principles. If you get these, you get the whole regulation. So here they are, the three pillars. Number one, every single transaction needs at least two different factors. Not one, but two. Number two, at least one of those factors has to be dynamic. That means it's brand new for that one transaction and you can't reuse it. Your classic OTP is a perfect example of this. And finally, number three, the factors have to be robust and totally independent of each other. So if a hacker figures out one, the other one is still safe and sound. Let's move on to the practical stuff. The who, what, and when. Who needs to get this done, and what are the hard deadlines? This is where we get into the real nitty-gritty of the rules. Okay, get your pens out, because these are two dates you need to circle. April 1st, 2026, that's the big one. It's the main deadline for all domestic digital payments to get on board with these new rules. Then there's a second date, October 1st, 2026, which is specifically for setting up a system for certain international card payments.
Now this part is a massive deal for all of us as customers. The RBI is making it incredibly clear. The buck stops with the issuer, meaning your bank. They are responsible for building strong systems and protecting your data. And here's the kicker. If they don't follow these rules and you lose money because of it, they have to pay you back in full.
So, you might be thinking, does this two-factor rule apply to everything? And the answer is no. To keep things practical and smooth, especially for small everyday payments, the RBI has created a few important exceptions.
And this table here, which comes straight from the RBI's own documents, lays it all out. You can see that things we do all the time, like small tap-and-pay card payments, recurring bills after they're set up, and even fast-tag toll payments are all exempt. It just makes sense to keep things convenient for low-risk transactions.
All right, it's time to see what's stuck. Let's do a quick revision round. I'm going to fire off a question based on everything we've covered. Try to answer it in your head before I reveal the answer on the next slide. Ready? Let's go.
Okay, first up, a foundational question. What's the absolute minimum number of authentication factors that are required now? The answer is 2. And remember, the key word there is distinct factors. Next question. Let's check your memory on those dates. What is the main deadline for everyone to get in line with these new rules?
Yep, that's April 1st, 2026. Absolutely a date you want to have memorized. let's go back to those core principles. Which one of them makes sure that one of the proofs you provide is good for one transaction and one transaction only?
That is the dynamic principle. It's what makes a one-time password so secure. It's useless after a single use. And for our last question, let's talk about who's accountable. If a customer loses money because these rules weren't followed, who has to pay them back?
Exactly. The issuer, your bank, is on the hook for the full amount. A really important point for consumer protection.
And that brings us to the end of our breakdown of the RBI's new directions. The biggest thing to take away is this. India is officially moving past just relying on the SMS OTP. We're heading towards a future that's multi-layered, dynamic, and way more secure. Which kind of leaves us with one final interesting question. With these new, more flexible rules, what cool new technologies are we going to see step up to replace the good old OTP? I'm talking push notifications, device binding, maybe even behavioral biometrics? The future of payments is already here. All the best with your prep.